Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. So, what happened in the market last week? Let's take a closer look. The major global stock indexes went up. The S&P 500 index rose by 1.4%, with substantial gains in the information technology sector, the 3.8%, and healthcare sector, 2%. In Europe, the Stoxx 600 increased by 0.5%, driven by strong performances in the consumer, discretionary, and industrial sectors. Japan's Nikkei saw a modest gain of 0.8%, propelled by improvements in export-related stocks. In currency markets, the Japanese yen faced fluctuations due to safe haven demand and BOJ's policy stance amidst global economic uncertainty. Meanwhile, the British pound remained relatively stable amid broader market movements and expectations surrounding the Bank of England's policies. The euro weakened slightly, minus 45 bps for the week, as the ECB delivers a hawkish rate cut, with inflation projections revised to the upside and a non-committal stance on further cuts. The week was volatile for oil and gold, with both commodities reaching bottoms midweek before recovering. Crude oil WTI closed at $76.02 per barrel, down from $76.999 per barrel the previous week. Despite midweek lows of 73 due to demand concerns and increased inventories, oil prices rebounded following OPEC's production cut extensions. Gold closed at $22.93 per ounce, down from $23.12 per ounce the previous week. Gold prices dropped significantly after the PBOC announced it halted its gold purchases for the month of May, ending an 18-month streak of continuous buying. This news, combined with stronger-than-expected U.S. jobs data, pushed gold prices to a one-month low before a late-week recovery influenced by rising U.S. Treasury yields and the Bank of Canada's policy signals. U.S. non-farm payrolls increased by 272,000 in May, surpassing expectations and indicating a robust labor market. U.S. unemployment rate remained stable at 3.7%, suggesting some slack in the labor market despite strong job growth. Eurozone GDP growth remained stable at 0.4% annualized, with ongoing concerns about economic recovery. Last week, markets reacted to central bank communications and economic data. The ECB cut its main interest rates by 25 basis points on June 6th, reflecting an improved inflation outlook and better economic conditions. This was the first rate cut in over 5 years, aimed at addressing lingering inflation concerns. Key data points, such as U.S. non-farm payrolls and inflation figures, drove market movements. Strong job growth in the U.S. provided some market optimism. What to watch this week? Investors will closely monitor the FOMC meeting scheduled for June 12th for clues on future interest rate policies. The Consumer Price Index, CPI report, will be critical for gauging inflationary pressures and potential monetary policy responses. Investors in Europe will be assessing the results of the European elections and their potential impact on market dynamics. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.